Good morning and welcome to the market forecast for Tuesday, April the 6th. John Hoagland here. Thanks for trusting me with your time. As always, we're going to be looking at our markets in context through the lens of risk management, always remembering patience. If this is your first trip to the market forecast, welcome. I'm glad that you're here. We're going to be looking at the crude oil, the E-mini S&P, the NASDAQ, gold, the euro, and the 10-year this morning as far as the markets we're going to be checking out. As always, we like to see what the economic numbers were this morning or still due out as we do check out first thing. This morning, 7:55, the Red Book numbers came out. Never really usually a very impactful number. But 9 o'clock, the job openings and labor turnover survey is due out. Now, there's a little bit more focus on this one this morning than typical. It's not usually a market mover because of the big jump in employment that we witnessed on Friday. So a lot of eyeballs likely to be on this job openings and labor turnover survey. As far as news is concerned, we've got our U.S. stock indices opening somewhat mixed, perhaps a little bit of maybe some profit taking overnight in the S&P and the Dow, which put up brand new shiny all-time highs yesterday. So a couple of records in our U.S. equity futures markets yesterday. Again, the Dow and the S&P is putting in all-time highs. Speaking of profits, the market value of the cryptocurrencies yesterday reached over $2 trillion for the first time yesterday. At least that's what I'm seeing in the news. Maybe we can use that to pay off some of the government debt that we seem to keep piling on. Yes, the JOLTS number today in sharper focus. Seeing a lot of news about it in the news that I was looking at this morning. So we're going to keep an eye on that. Again, that's at 9 a.m. Central this morning. Watch it. Be ready for it. Make sure you protect yourself. We say it all the time. Make sure you use stops. Very important. Crude oil still somewhat range bound as the battle between greater supply and potential greater demand kind of wrestle with each other. Hopefully the greater demand that we're talking about is the fact that the vaccines are going to work and everything is going to hopefully go back to normal and we can go back to our lives as usual. This morning, the VIX is lower, 1757 last time I looked. The dollar index largely steady at 92.54. Then the 10-year yield down a little bit this morning at 1.68%. As always, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Speaking of going live, tomorrow afternoon at 3 p.m. Central, the CEO, the CVO, and founder of Top Step is going to be on with Dan for a question and answer session. I know a lot of folks will be looking forward to that. And then before that on Wednesday, as always, we're going to have our group coaching session. I'm going to put the link in so you can register for that tomorrow afternoon at 1 p.m. Central, group coaching. 1 week from tomorrow, the good doctor will be back at 3:15 p.m. Central. I'll start putting the link in so you can register for that probably tomorrow. Always a good day here at Top Step when we have the good doctor come and talk to us. He is a clinical psychologist, also an active trader, has worked with many institutional traders and always has wonderful advice on how we can improve our trading psychology. I'm going to say good morning to everybody. As always, Ralph, first one in the room, you win the prize. Good to see you, Ralph. Brian, Felix, good to see you. Murph, Mr. Positive, good morning, traders. It's another fine day, another chance to play our trade. Make the most of it. Absolutely. Good morning, my brother Rick, Joseph, Will, Nico, Ed Nelson, James, Bill, Tim, George, Nick, JD, the dancing bear in the room this morning. Hope you're doing well there, JD. Danny Ireland. It's great to be back in the Chicago burbs. Welcome back, Danny Ireland. I'm in the burbs too. I wonder where you are. Patrick, Mike Magallanes, this chef is in the house. Patrick, can we trade micro silver in the combine? Not yet. Not yet. We're watching some more of the micro contracts. As soon as they become liquid, then we start our opportunity. Well, then that gives us the opportunity to work on our tech to start adding some of those products. It's a great question. Don't have a timeline for that, Patrick, but a great question. And keep asking. Keep asking. It's the questions and the feedback of the people here at Top Step, you folks that create the ability for us to provide what you want. So keep mentioning it, keep talking about it. Good morning, Kevin, Rob T, Shady Trader. Good morning, Jason Cargill, Mr. Shine's Mystery Channel. Hello, good to see you again. That's the link for group coaching tomorrow. Bulldozer, Theo, good to see you as always. Trading Research, 8 Ball, good morning, and Oleg, good to see you. If I see some new names there, thanks for popping in and saying good morning. If you are, so if you do stop in on a daily or semi-daily basis, let us know you're here. Make sure you hit the like button, and we're going to get started in these charts here in just a hot second. And here we go. The daily in crude, just going from left to right. Let's bring it up here. So, yes, range bound for a couple of weeks, maybe even a little bit longer. It's been some news coming out about the crude oil market, OPEC increasing production, but on the other side of things, things looking good as far as the vaccines are concerned. I drove my daughter back downtown on Sunday night, and it was like a Monday morning of old. Everybody was out on the roads and everybody out doing stuff. It was really good to see, although I don't like sitting in traffic, but at least it's a sign that life is coming back and we are going to be able to do things. So, crude oil just seems to be caught between the increased supply and potential greater demand. Low volume on an attempt to close below weekly kickoff low was rejected. That low volume, partially because Europe was closed yesterday, some of Asia was closed yesterday as far as their markets were concerned. So we saw lower volumes across the board, which is to be expected. We did not, however, close below that weekly kickoff level. Open interest, we added, it looks like about 7,600 in open interest on this push to the downside, but was unable to close below that important inflection level. This big boost in open interest at the low end of this balance area may be actually kind of trapping shorts, and we see crude oil moving to the upside already this morning. On the 30-minute chart, we've got some overnight longs. Settlement is down here. Settlement again is 58.65. Put that on your charts. Here's our move down below weekly kickoff inflection level yesterday and the close back above it. So a little bit of an excursion, a little bit of a failed auction to the downside and back higher. Where are we now? What are we looking at this morning? Well, look at the overnight low, value low. Look at the overnight high, value high. I'm going to try and stay patient today. We always seem to say that, but this is the reason, because we're inside value. We haven't really gone very far. We may have some overnight longs here, which may be useful for us at some point today, but so far we're seeing what looks like the opening range is the low of the session, but I don't think that that's going to end up being our best trade location for the day. Why again? Because we are inside range and value from yesterday, and we are really kind of range bound in a medium time frame kind of way. You saw that on the daily chart. We've been in the same range for 2 to 3 weeks. So until we break out of that, I'm going to be depending on short time frame levels. look at what our high was yesterday, or relatively close to the high from yesterday was the previous day's value high. Our low from yesterday maybe past a little bit past an important inflection level, pretty deep as a matter of fact, but returning back above that has returned buyers back to this market. Remember, we talked about the increase in open interest on the downside was pretty substantial, 7,600 on a low volume day. It seems as though we may have trapped some shorts kind of in the hole here. So we'll be watching for opportunities to look for longs down near this weekly kickoff level, maybe our overnight low, maybe the settlement price, maybe the value low. This looks like a pretty target-rich environment down here to me. Our overnight high, basically the high of value from yesterday, the point of control from the day before. These are short time frame levels that may be respected because, again, I feel like we're in kind of short time frame control, just from the fact that we are in balance for the last 2.5 weeks. So be patient, look for good trade locations as the day goes on. Yesterday, as a kind of a review of what happened yesterday, we opened in range and value, but we kind of got some aggressive sellers on the open. We had some shorts in the marketplace from overnight. Those shorts continued to get paid. We've continued to barrel in sellers to the short side here, which is part of what makes me think we're kind of holding some shorts in the hole here. And I'm going to probably be looking for opportunities as the day goes on to buy weakness in this market. Again, down here, very kind of target-rich environment if we get the opportunity. In the middle, I'm not really interested in doing much, although it does appear that we've left the opening range at the low of the regular trading hour session. If that remains, buyers are in control and may be in control. So I'm going to be watching to see what happens. Again, I'm not really expecting this opening range to be the best trade location for the day, again, because we are largely in range, in balance, in value. You're going to have to wait and see how things play out here. We have API this afternoon. We have EIA tomorrow at 9:30. So more information coming for our crude traders in the coming days, as always. S&P's off a little bit this morning. This will be one of our markets that is opening lower. I think the NASDAQ was higher last time I looked. Russell was higher. Dow was a little bit lower. So the markets that put in the new all-time highs yesterday are the ones that seem to be kind of pulling back a little bit. That's a natural thing in markets. So take a look. We've got 3 days of low to high opening range, the low of the session here. Same here. We've had some pretty aggressive buying coming into this market. A little bit higher volume yesterday. Even with Europe gone, we added 58,000 in open interest. So the indication in volume and open interest is this auction is still presenting as a healthy auction. When we increase volume, when we add open interest in the up direction, that's likely to continue in that upward move. It doesn't have to happen, however, in a straight line. We're getting a little bit of a pullback here. We're always looking for opportunities when the market is strong to buy weaknesses. But this is all initiative activity. In other words, all this buying up here isn't because price got too cheap. It's because traders believe that price has more room to go to the upside. So as hard as it is to believe, as hard as it is to continue to buy into this market up at these levels, it is what the market is telling us to do. Today, of course, could be a different story, and at any time, headline news can change that drastically. So volume maintained yesterday, even with the Europe out of not in business. 58,000 estimated open interest boost. No major data today. Of course, we'll be watching that JOLTS number. It seems to be shining a little bit brighter in the sky here after that unemployment number on Friday. So eyeballs will be on it. It may or may not be impactful. Typically, it's not a hugely impactful number, but it may be because of, again, the information we received on Friday. could we be expecting some sort of relief break? I'm looking for that to happen closer to weekly kickoff high, but it doesn't mean it can't happen before that. And it is so hard to buy at high levels like this. But our equities, the S&Ps, the Dow put in all-time highs yesterday, and it looks like the auction is still healthy. So be looking for opportunities to buy breaks if you get them. It's so hard to do. I know everybody's thinking that the high is going to be here soon, but that's exactly what the equities markets do. These equity futures just get short time frame traders short, thinking they're afraid they're going to miss the big move to the downside, and then they just continue to grind the market higher on them. They grind and grind and grind. It happened on Friday. It happened. It just keeps happening, and I've been watching this happen for 40 years. I haven't yet been able to really time the dead high at any point in my career, and we're talking about 3 decades of experience in the S&Ps here. So it is always challenging, and it's one of the things that keeps me coming back, and I think that's one of the things that keeps Murph coming back too. He's always so positive and so happy to be here. He truly enjoys what he's doing, and that I think is going to take Murph a long way. Let's take a look at the 30. So here's our abbreviated no session on Friday. Sunday, where do we go here? We created a gap. We left the opening range at the low of the session. We had another spike day on Friday. On Thursday, I should say, there was no trade in the day session on Friday. So we opened above that late spike. We left the opening range at the low of the session, and we really pushed this market higher almost all day. We got a little bit of a pullback that may have been something that you may have been able to take advantage of, but it's always a short-term thing when we're against the bigger picture. If we end up short, we want to have really reasonable and probable profit targets for us. We don't want to fall in love with them. So last night we put in a new all-time high in the overnight session. Markets don't like that. Settlement is here, 4067.75 is settlement. Put that on your charts, very close to the point of control from yesterday. Did we have some overnight shorts here? Did we just reconcile them? Quite possibly. There's lots of space and lots of repair to do below the marketplace, but I can't anticipate that. I got to wait until something in the marketplace tells me that it's likely to happen. Then I can respond to it. So whatever you think of these markets, whatever you think of the S&Ps, whatever you think of the equities that you may be trading, it's probably going to be worthwhile looking for some sort of structure instead of trying to step in front of a freight train. They always say that, waiting for structure costs in trade location, but you can still get decent trade location once some of the structure sets itself up to limit the risk in anything that you're doing. So again, we are basically in range, in value. I'm going to try and stay patient today. Our overnight low and overnight high. Overnight high is certainly going to be a visual target for traders today. Overnight low, is that going to be enough to kind of scare some of our longs that have been piling into this market for the last 3 sessions, going, opening ranges, they dead low for 3 days straight, continuing to move this market higher? I don't know when it's going to break, don't know where it's going to break. Just know it's going to. There's going to be some sort of a pullback, and that pullback is likely to be vicious. Moves in the opposite direction tend to be fast and short-lived. So be careful, of course. Try and stay patient. Wait for the right opportunity to try and catch anything in those markets today. There's no real, headline news expected today, but we never know when that's going to happen. Here's the NASDAQ. NASDAQ, we finally got a decent upside push. We lost 4,100 in open interest. That's the estimation again, but would that say that this initial push to the upside was kind of fueled by shorts? Very well could be. That's what the equities do. We finally got a close above weekly kickoff high, which was 13.5 573. Volume and open interest act more like short covering. We had some okay volume for a holiday in Europe yesterday, but the loss in open interest indicates we had buyers getting out of short positions instead of new buyers coming in the upside direction. Now this could change today. This important inflection level, weekly kickoff level, is chosen because it's an area that I see and I believe that longer, stronger traders are probably going to, at some point, adjust inventory. Are they going to adjust inventory for continuation to the upside? Are they going to cover shorts or add to long positions? Or are they going to sell back down below this and add to short positions from that point? Nobody knows for sure. Just at the opportunity here at weekly kickoff, which we are basically right on right now, just about to open up, offers a potential bigger move away from. There are the times when the market can become somewhat magnetic to these levels, but looking in the past, we had a really stiff rejection back here. We've had another stiff rejection once accepted down below from this level. Is it going to happen again? We don't know. Probability states it's a decent level for that to perhaps happen again. Looking now into the 30-minute chart, okay, we've got our weekly kickoff of the black line here. We have range and value from yesterday. We have settlement from yesterday. Again, that's 13,585.5. Put that on your charts. Opening very close to that level. No overnight inventory. The market really just kind of presenting the fact that it's comfortable right now in the overnight inside value. Overnight high, above value, overnight low, above value, largely an inside overnight day, except for the fact that it did push higher. But remember, this is not a new all-time low for this market. So opening so close to settlement right near this weekly kickoff level has me conflicted as to say, do I need to act early or can I be patient and wait for trades as the day goes on? See what the market does. If the market leaves the opening range at the high or the low, so close to this weekly kickoff level, that might be an opportunity for us to catch an early move. Other than that, I'm going to try and stay patient. I'm looking to what happened overnight. Last night, this important inflection level became somewhat magnetic. It started there, it went higher, it went back to it, it went lower, it went back to it, it went higher. Now it's back to it again. That's overnight kind of behavior. But if it remains in the regular trading hour session today, it might be one of those days we could get chopped up around weekly kickoff level. If we leave this level in either direction, it may be something where we're going to want to kind of go with until proven wrong. I'm going to get into gold now. Gold has been kind of falling into kind of a double bottom or a W bottom in the longer time frame. Not suggesting that we've broken downside structure here just yet. Hang on. We mentioned this was going to be kind of a sticky area. It was sticky on Friday. Or sticky on Thursday, I should say. Sticky yesterday. We're into it today. We're getting a little deeper into it. This area here, this area of balance has, there was a lot of time spent there, and there's a lot of possible more business to be done there, if you will. Low volume yesterday, of course. Europe had a lot to do with that, only adding 400 in open interest yesterday. Very narrow range, not a lot going on there. So I'm going to be watching to see if this market it is going to open. It looks like, well, it didn't open, I don't think, with a gap. We'll see that very shortly here. Looking for a possible test of weekly kickoff high. It may be hard for us to get there because of the stickiness of this area. Volume to improve today. Not a big changer in open interest yesterday. It's going to be cool to see what happens today. So, did we open with a gap? We did. Did we close the gap since the open? We did not. Settlement is down here. 1728.80 is settlement. Put that on your charts. We got too long. We reconciled. Are we too long now? We're testing our overnight high. We've already tested it once. Are we going to continue? Again, we tried to close the gap. Well, gap rule says if we can't do that, we're looking for opportunities in the direction of the gap, which would have us looking for longs to the upside. The difficult part is going to be finding good trade location today for that move. Take a look at the 30. Oh, we are on the 30. Any more notes here? No gap close. Look to the weekly kickoff high, 1750 for more of an opportunity, and that's a pretty decent move. If we're going to go in the direction of the gap, this is a pretty good 10-point move. Not too substantial for it to actually happen. We'll be watching today. The euro was really led by the dollar yesterday because, of course, European markets were closed. Hang on a second here. So volume and open interest were expectedly low yesterday. We lost 1,400 in open interest on this move to the upside. Perhaps we got a little bit too short in short time frame off the lows here. Weekly kickoff low is here. We are working weekly kickoff high right now as we speak. This is going to be an interesting level. I think it's kind of pivotal for us today, long above, short below. But again, be careful with that. If it becomes magnetic, it can get you a little bit chopped up. Again, lost 1,400 in open interest yesterday. Here's the 30. No gap. We did not leave the opening range at the low of the session, although it only took one little brief look down below that. So 11846 is that weekly kickoff high, and it's right where we are right now. We did not open with a gap. We are driving away from yesterday's range and value. If we find acceptance above that, as well as acceptance above this inflection level, weekly kickoff high here, which is again 1846, right about where my cursor is, then we may see some acceleration to the upside. The dollar was a little bit off this morning, wasn't it? That was kind of steady, but it had fallen off the highs, and it would appear that the dollar may be continuing to weaken just a little bit against the euro here. So we'll be looking at this 46 as a go, no go level. 10-year? Pretty decent inflection level in that weekly kickoff this week. So we've had one, 2, 3, 4, 5 straight days of testing, accepting, not accepting. It's been a bit of a tight wire for price for the 10-year as the yield continues to fall off. It seems we're finding some support there. I'm calling this more of a downside digestion than an all-out change in market state to balance. But although that could certainly prove to be the case, it's the fourth day in this area of balance and digestion, continuing to test the weekly kickoff low. If we've found buyers there, how many times are we going to be going down there before we exhaust those buyers? All depends, of course, on yields. Open interest indicates buyers yesterday. We added 27,000 when we closed higher. Volume, of course, was again low because of Europe being closed. So taking a look into the 30-minute chart, here's where we added that 27,000 contracts off of this weekly kickoff low where there was no sign of acceptance. Seems as though we're continuing that move to the upside. I would have to say we did open with a gap. We have not closed that gap. That has us looking for continuation to the upside. We've got a overnight high just above where we are right now, which may provide a degree of resistance. But if we can't hold that, see no reason that the market can't continue to move to the upside. And now I have gone way too long, and I apologize for that. I want to let everybody get their deep breath and get into the markets. As always, I'm going to take my deep breath and get down to see what's going on in the equities open. Get out there and profit today. Trade well. Don't forget tomorrow group coaching and the Q&A with CVO and founder Michael Patak. I'll let you get down to business. I time just sometimes gets away from me and gone a little bit too long. So have a great day. Don't forget about the market forecast today with Dan. Also at 11:30, we have Coach's Playbook, and we'll talk to you then. Have a great trading day.